Hey everyone, happy Monday. Today on the Final Bar, nice upside day for stocks to kick off this shortened holiday week. The S&P 500 finishing slightly higher, about 0.7%. We're going to review the Magnificent 7 stocks and a couple others. What levels are key for these very important charts? Finally, we'll have a live Q&A after our market recap. Get your questions in now in our live chat. We'll hope to get to as many as we can. Ladies and gentlemen, this is the Final Bar. Hey everyone, welcome to the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a sunny Redmond, Washington. Thanks for joining us every weekday after the close as we break down the market action using the best practices of technical analysis. The Technical Analysis Toolkit is really designed to help you focus on the evidence of the markets themselves. Instead of thinking about what could happen or what should happen, you focus on what actually is happening. There is a lot of capital to be grown by focusing on what we call trend following or momentum investing, where you recognize strength and follow it. We recognize weakness and lean away from that. Also, we can focus on inflection points, focus on what we call a change of character, when things rotate from a bearish phase to a bullish phase. Maybe seeing some of that set up as names like Disney that have had really good runs off of very weak levels, but now getting into that overbought region, finding more and more stocks kind of getting up into that RSI over 70 sort of conundrum. So we'll look at some of those as we get through our market recap today. Today we have a really cool live Q&A as we like to do every Monday. So get your questions in now in the live chat. After our market recap, we'll go right to the chat, get to as many of those as we can. So put them in there now. Anything is fair game. Anything about the markets, about technical indicators or technical analysis. Ohio State's dramatic victory over Minnesota and the setup for Ohio State, Michigan this weekend. Thanksgiving traditions, whatever it is, we're happy to get to it. Let's start it off with our market recap. Before we get to the charts and look at how the S&P and the NASDAQ pushed higher today, we do want to start with a poll question. We're doing a bit of a sentiment poll here every weekend and trying to get a survey of our viewers of where you're at in terms of your outlook for the markets. So we asked you this weekend, what is your outlook for the U.S. stock market over the next 6 months? Kind of a good medium-term time frame, not too short, not too long, kind of a Goldilocks time frame for a lot of investors. 51% saying bullish, that's just over half, and then split about half and half between neutral and bearish. So certainly a bullish sentiment to the tape here. Certainly last week, a lot of strength through the course of the week. That gap higher sort of earlier in the week on Tuesday really propelled the markets higher through the remainder of the week. Today we sort of pick up right where we left off. We had the Treasury auction earlier today. Pretty successful, right? No big negative shocks there. Plenty of liquidity, and that usually is a boost for bond prices, and certainly today other risk assets as well. Thanks for answering that poll. By the way, make sure you subscribe to our YouTube channel. Follow us on the socials. You won't miss the next poll question. Great way to get you thinking, get the wheels turning about charts and technical analysis using the StockCharts platform. Let's continue on with our market recap. As I mentioned, kind of a decent update for stocks here. It was rolling over a little bit into the close, so I was wondering where we were going to sort of finish off. The S&P did finish today just above 45.47, and that's up about 0.75% from Friday's close. The NASDAQ Composite a little bit stronger, up 1.1%. You can see mid caps and small caps here, both up about 0.4% from Friday's close. The only red on this front page is the VIX. Now, the VIX has overall been sort of trudging lower and lower. There was that period, it feels like a long time ago. It was only about a couple weeks ago where you had the VIX spiking above 20, getting up into that 2021 range. And that was when it felt like this October downdraft could really turn into something more significant. We were talking about downside projections, thinking about levels of potential support, what to look for. And now we've all of a sudden seen, of course, this great rotation back higher. November, incredibly strong on the seasonal tendencies. November tends to be a pretty strong month. This November pretty much playing out as you'd expect there, and the volatility is coming down. So when you think about what are the conditions and how they've evolved, I think you think about volatility lessening. You think about credit spreads tightening, which is tends to be a bullish sign. You look for interest rates coming down, which tends to be more of a tailwind for growth stocks. All of those sort of things you would need to see to propel risk assets higher are kind of happening here in November. And that's why you're able to see the S&P 500, the NASDAQ, pushing to the upside. Looking at the bond markets, as I mentioned, a Treasury auction earlier today. And if you don't understand those, outside the scope of the 30-minute daily Final Bar, but usually an important regular occurrence because that's when the Treasury is actually putting bonds out. and it's sort of the primary market for Treasury debt. And seeing the demand that is that faces the supply that is released is often an interesting sentiment reading. Today's sort of business as usual. Things kind of going pretty well for the 20-year bonds, if I remember right. As a result, yields coming down, bond prices pushing higher. So the TLT is above $90 a share now, up 0.6% from Friday's close. You can see the yield curve for the most part, 5, 10, and 30-year points all moving down. Not a ton, but just moving down a little bit. So the 10-year yield currently around 4.42%, we'll call it. And this is, of course, down from testing 5% as the equity market's sort of rotating lower. You saw interest rates pushing higher. 10-year yield hitting that 5% level. And the real question was, are we going to get above there? We didn't. We stalled out right at 5%, now coming back and pushing a little bit lower. So down around 4.4%, just a little bit above there. The dollar moving down slightly, about 1/3% lower from Friday's close. That's another important sort of market measure to look at. When you think of big picture indications that can help you understand what is maybe driving the equity markets, I would be thinking interest rates, I'd be thinking the dollar, and lower rates, weaker dollar, certainly the the perfect meal for the markets to be pushing upside, and that's what we're seeing here. Gold and silver both down. Gold, the GLD just slightly lower, about 0.2%. Silver down about 1.25%. Natural gas prices lower, but a lot of the rest of the commodity space actually in the green. The DBC, which is a broader commodity ETF, very much skewed toward the energy side, but representing other commodities as well, up about 1.25%. The USO crude oil ETF up over 2% today. Gas prices as well. So commodities pushing to the upside. Energy, not a great day on a relative basis. We'll get to the sectors here in a minute. Cryptocurrencies continuing to just chop around, but overall, Bitcoin overall pushing to the upside. I was struck when I was looking at the market dashboard earlier today, sort of starting to prepare for the show. Coinbase, one of the top 10 stocks in our proprietary Scooter rankings. It's been a while, Coinbase, since we've seen you in there, maybe ever. I don't know if it's been in there before. Maybe, but not that I remember, and certainly not in recent memory. So tells you about the rally we've seen in Bitcoin and other cryptocurrencies to see Coinbase, one of the top 10 ranked stocks based on the trend, combining different time frames. Bitcoin today finishing just below 37,500. Ether prices above 2,000. That's an important benchmark we've talked about. Actually got above there over the weekend and staying above there today. Finally, looking at the 11 S&P 500 sectors, a lot of FANG at the top. You have the XLK, the technology sector, up 1.5%. Communication services, number 2, up 1.1%. REITs, number 3, up 0.8%. On the bottom, just 2 of the defensive sectors down today. Utilities down about 1/3%. Staples essentially flat, just slightly down. The materials up, and energy just slightly above the 0 level. So certainly sort of the growth leadership, tech, communication services, those magnificent 7 sectors at the top of the list today. Let's go to a daily chart of the S&P 500. Let's look at what happened. Here's today's bar right here. So, as you're looking at the chart of the S&P and how things have progressed, I mean, it's striking to me how different the market looks as we progress through the month of November compared to where we were toward the end of October. At the end of October, we're bouncing off of a new swing low. We made almost a new 6-month low. We're thinking, and I remember looking at these measurements, thinking about, do we test the 61.8% level down 3,900? Are we testing the January, March lows? Are we getting down to 3,500? These are the sort of questions I think you have to answer when the S&P is unable to find a floor. That all changed here, and it's a great reminder. And I think 2023, if you've ignored seasonality and ignored the normal seasonal tendencies of the market, as illustrated by the Stock Traders Almanac and others that tend to focus on those seasonal cycles, I think you missed out on some good opportunities this year. This is, sort of July through October and the weakness into an October low. Pretty classic in a normal year, but especially in a pre-election year. Strength in November and usually in December has tended to follow, and you're seeing pretty much all of that. The playbook has played out pretty well this year. So good reminder to remember those seasonal tendencies. But at the end of the day, you don't have to know these things ahead of time. Just focus on the charts. Look at all the things that have changed. After we made a new swing low, we got back above the 200-day. We got back above trendline resistance. We've, really any sort of level that you've been focusing on. The October high, a trend line off of the lows, off the highs through the summer. All of those have been validated. Now you saw the gap higher on Tuesday of last week. That was on the latest the CPI number. Now we're just seeing a further push to the upside. So now what's happening is the S&P 500, a lot of names more and more are becoming overbought. And my general thought process when I see a market rallying aggressively and becoming overbought, two things. Number one, this tends to actually be long-term bullish, right? The market usually doesn't become seriously overbought in a bearish phase. The very fact that it's becoming overbought is usually more of an encouraging thing than not. What you want to look for is when the market's moving higher and not becoming overbought. That's what's called a bearish divergence. And now that we are becoming overbought, that is immediately where my head is at. Do we see further upside and we see the momentum start to slope downwards? That would be a danger sign, but we're not seeing it yet. So for now, just the fact that the RSI can get up to this level is usually a pretty encouraging thing. The second thing is to prepare for some sort of short-term pullback, and that could be like a mid-June where you pull back for about a week and a half. It's not too much. It was maybe 200 points, right, from peak to low, maybe 100. Sorry, no, it's only about 100, 150 points, right? But then you sort of continue the uptrend after that. Or it could be something more significant. But when we get to that overbought region, long-term bullish, short-term bearish, or short-term looking for signs of bearishness, looking for signs of a rotation lower, it's kind of where my head is at as we see the S&P testing really the July high around 4,600. That level is now in play. Double top, very much a possibility here. So watch to see where we do against resistance. Now, when you're thinking about some of those key resistance levels, we can look at the S&P 500, we can look at breadth, we can look at sentiment. All of those things I think are important. We can also look at some of the leading names. So with the remainder of our market recap, I just want to focus on what we call the Magnificent Seven and friends is what I would call. So I have a working list of the Magnificent Seven stocks that I think are now generally accepted as the evolution of the FANG stocks, kind of captures those leading growth names, and then others that I will take the liberty of peppering in when I think they're important to watch. So we'll start with Apple. And again, you have two leading names in the technology sector, Apple and Microsoft. The two of those together make up about half of the XLK. They've certainly been strong in November. Again, lights out to the upside after making a new low going into the end of October, just reversing to the upside. What strikes me with the chart of Apple is it just broke above this trend channel here, right? Especially this trend line off of the highs. Now, the QQQ broke above a similar trend channel. We highlighted that on this show when we saw that rotation. And when you have a trend line that is so clearly defined, you're looking for two things. Do we break above the trend line, which we did in early November? Do we break above the most recent swing high, which was here in October, just around 182, we'll call it. And we did that very soon after, a day or two later. And from there, we've now progressed higher. Now, what we've not seen with Apple in the last 3 weeks is any sort of pullback. I mean, most days for Apple in the last 3 weeks have been up days. We've had very few down days and very few days where we actually haven't made a new intraday high for this swing. So you're looking for a pullback. And again, when stocks like this are overbought, it's been an incredible run. That is awesome. Nice move to the upside. I think that's constructive price action. We're facing resistance and we're overbought. So the way I was taught as a budding technical analyst was look for a pullback from resistance. And then you see where the higher low ends up. Then you see if we're able to push the momentum above that previous high. So, a name like Apple getting to a place where you may expect some sort of resistance. Reminder as we continue on with Microsoft, the chat is open. Put some questions in there. I see a number of them in there. Really appreciate it. Put in any questions that are on your mind. And the remainder of the show will actually be going through the live Q&A. So would love to answer your question live here on the show in a few moments. Microsoft's number two. So as I mentioned, those two stocks are the market cap in the technology sector. One of the differences between Apple and Microsoft, I think Microsoft has this kind of nice rectangular shape because you had this really consistent support level around 310. We actually found that level back in May. We tested it in August, again in September. And then you have the resistance here around 340, and that's really taken from the September and October highs. We broke above there. Now we've already broken out. So interesting to know when you think about new 52-week highs, Microsoft is one of the growing number of stocks making a new 52-week high here in November. Look for that number to increase. If you're bullish here, I think you want to see that number go higher and higher. There's nothing wrong with more stocks making new 52-week high, pulling a Microsoft as it were and eclipsing its high from most stocks from the summer. Now, Tesla is an outlier, right? When you think about the strength in Microsoft and Apple, Tesla a very different picture. And the chart of Tesla was one of the more bearish charts, I would argue, going into the end of October, not just because it was making a new swing low, as many were. It broke below the 200-day moving average, which not all stocks did, but it also had this really classic coil pattern, which is another word for a symmetrical triangle pattern, right? Lower highs, higher lows. You're consolidating around a midpoint, and you're looking to see which way this thing breaks. And it actually broke through the downside. It gapped down in mid-October and then floundered here for a couple weeks. Now, it is in the short term making higher highs and higher lows. I would love to see it get above this range, get above the 50-day, get above this coil pattern, get above that equilibrium price around 260. That would be a nice upside follow through. I think Tesla still has a good amount to prove. And the RSI, well, a lot of stocks are overbought. The RSI is still below 60. So the RSI, the momentum is actually more in a bearish phase still. So compared to the first two charts, I would say Tesla very much an outlier to the downside. Meta, probably one of the more constructive charts and an actionable buy signal here, because you have this consolidation pattern, real classic basing pattern, consistent resistance, consistent support as comprised by the shaded area, breaking out to the upside, a bit of a pullback, testing the upper end of this range and then following through. I think Meta's a strong chart showing signs of further strength. Netflix, very similar to the Apple chart, great run, check. Breaking above trend line, check. Testing the previous highs, check. Very overbought, absolutely. So it's all of those issues we had are encouraging signs, but also potential issues we see with Netflix as well. Nvidia, probably a really important chart this week. When you think about a holiday week, usually lighter volume, not a lot of news flow, not a ton of earnings, although there are a couple stocks like Zoom Video today here after the close, but overall not a ton of action. It's usually a little quieter week, and then next week we sort of finish out the month of November going into the final month of the year. Charts like Nvidia kind of testing a key resistance level, of course. This is from the end of August. We tested this 500 level. We're now right back up to that point. Nice up day, up 2.25% today. Do we get above there? We're overbought as we test resistance. And again, I see this overall as an encouraging setup, but really encouraging if we're able to break higher. Do we make a higher low when we pull back, which will happen at some point? Maybe not today, but at some point. And that's what I would be looking for. Maybe two more charts here, and then we'll take questions from the live chat. Amazon, very similar to some of the previous charts. I think Amazon was an interesting chart at the end of October because it actually did break down, just a really clear breakdown. So, do I feel like being bearish at the end of October was a huge mistake? Well, I don't think so. I mean, has the evidence changed? Very much so, and that's one of the things we talked about, right? The breakdowns are bearish. Here's what we need to see to reverse that bearish sentiment, and those things have happened, right? That sort of, that exit strategy from a short position all have been fired out. And I think that's the way to think about the evidence. Look at the weight of the evidence, recognize when the evidence changes. I think it has. Now it's all about, can we get above resistance, as with a number of the other names here. Alphabet, probably one of the least exciting charts out of all these because it's languishing between resistance around 138 to 140. We're kind of just below those levels. RSI still in that bearish range, as you see here, below 60. So I think you're spread with the Magnificent Seven stocks between some of those real strong breakout names like we saw in technology. Some of the names really languishing like a Tesla and an Alphabet, still with very much a good amount to prove. Then you have names like Nvidia really right at that resistance. I think the bull case for the markets here has these leading names continuing to lead, which means they have to get above resistance, have the momentum continue to follow, and have higher lows. And that might be the thing to look for as we come out of this holiday week, finishing out the month of November. That's our market recap for today. Here on a Monday on a shortened holiday week. We're going to get to our live Q&A in a moment. Before we do, a couple quick announcements. First off, we'll have an interesting sort of unusual week here as we go around the Thanksgiving holiday, but we are always looking for your questions. We appreciate you sharing some questions in our live Q&A today. Anything we don't get to, we will put in our mailbag. Anything comes to your mind, off hours, anytime we're not doing a show, just email us at thefinalbar@stockcharts.com. Of course, while you're here watching the show, make sure you subscribe to our YouTube channel. Click the like button if you could. That will help us spread the good word of technical analysis to other investors and hopefully give them some tools to make better decisions as well. Also, to let you know, pretty big week here at StockCharts. We have our Black Friday week sale kicking off, and it is open now. If you go to stockcharts.com/special, you'll find all the information. If you up any sort of annual subscription, whether it's the basic level, the extra level, or the pro level, you get 4 months free if you lock in an annual subscription here. Even if you are a current member, you don't automatically get these rates, but as a current member, if you go to this page and click Renew Now and Save, you can actually push out your expiration date using this current low price. So if you are a StockCharts member, which you all should be, and if you are looking to be a StockCharts member for a while, which you certainly should consider very strongly, this is the week to do it. Go to stockcharts.com/special. Monthly, annual plans, all with really good deals right now. The annual one especially, you get 4 months free, which is a pretty incredible offer, and I would encourage you to check it out. StockCharts is probably the most underpriced thing. You think stocks are underpriced? I would say StockCharts underpriced for the value you get, and I hope you agree with me. So make sure you check that out. Let's get to our live Q&A here and kick it off looking at the chat. Thanks, everyone. Keep the questions coming. We'll get to as many as we can. We'll start at the top of the list here. My question, Luca asks, where can I find reliable information on overall market positioning and fairly reliable information on market sentiment as a chart to see historical highs and lows? Really interesting question. A couple ways I could answer that. I would probably say, I think some of the traditional measures of sentiment are actually very good for this. When you think about sentiment, I sort of loosely put in the bucket of sentiment two general things, right? One would be positioning data, so basically looking at the options market. This is something like the VIX or things like that, put-call ratios, right? How are people actually voting with their capital in the options market, whatever market we can track? Or it's survey data, the AAII survey, the name exposure index, RIDEX flows is a little more positioning. So, these other ones are basically asking investors, just like we did in our poll over the weekend, are you bullish or bearish? And then aggregating that. What's your exposure to equities? And aggregating that over time. And the current reading is always interesting, but it's more about the trend over time. Easy way to get to a bunch of good sentiment charts. If you type marketmisbehavior.com/sentiment, this is a link that I set up to go to my shared chart list tracking some of the sentiment indicators that I follow on StockCharts. This is a list. If you're a StockCharts member, you can save this right to your own login. You are welcome to these charts. These are ones that I set up and I've followed and keep them updated randomly. But if you're not a member, you can see live versions of the chart. Just check in on where they're at. Things that I would point you to, given the nature of your question, I would say survey data like the name exposure index is pretty interesting. We're actually talking to Ryan, who's the president of NAME, the National Association of Active Investment Managers. We'll hope to get him on the show. Hopefully we'll be able to get him in the month of December, to talk about the name exposure index, how it's calculated, and his experience of using this as an indicator, trying to think about positioning. But this is a really good way to think about how money managers are positioning. Below that is the RIDEX flow, so looking at the RIDEX funds and how individual investors primarily are rotating between offensive versus defensive funds. Another idea about positioning would be the put-call ratios, right? Just looking at bets made on those two sides of the options market. And again, current levels are always interesting. The change in those levels I've often found really, really interesting. The put-call ratios, by the way, have dropped quite a bit, suggesting a move to defensive or more of the bearish positioning here. You can see that here as the put-call ratio. Put-call ratio is coming down, means rotation to call options, more bullish sentiment. It tends to be a contrarian indicator. You can see when the indicator became very low in July, very low here in February when you get to those significant tops. So we're kind of getting down to that level, but the average, and I have a 5-day average here in pink, really sort of getting lower and lower. That might be something to watch as well. So you're welcome to do that. Go to marketmisbehavior.com/sentiment. That'll get you to this shared chart list on the StockCharts platform. And again, if you're a member, make sure you can click the green button, put in your own login as well. Next question. Let's see. Does Carter Worth watch your show? Great question. I'll ask him. I doubt it. I don't have a lot of time to watch other technical analyst shows myself, so I'm assuming Carter's pretty busy too. I don't blame him, but everyone else should be watching the final bar, of course. Last Monday there was Tesla question, inverted head and shoulder and filling gap. Same evening at Fast Money, Carter put out a special alert, long until $240. So I don't watch Carter on TV, but I do know Carter pretty well. In my Fidelity days, when I managed the team up in Boston, he would come and visit us about once a quarter. I had a lot of fun. He's a really, really thoughtful analyst. And again, really, really good in my experience at looking at different names and comparing them. He would often say, all right, stock A, stock B, would you rather own this or this? Doing it all with charts. And I find that to be a really helpful exercise about not just analyzing one chart, but thinking of the relative value of one chart versus another. And I think he does that quite well. Let's see. So again, I can't independently validate what you're asking about, but I'm happy to take a look. Let's see, inverted head and shoulder and filling gap, right, and then long till 240, which kind of puts up into the same. So I think you're talking about this kind of shorter term. I'm looking at the ACP platform here. I think you're talking about this little guy right here as an inverted head and shoulders bottom, measuring up to 240. That's about where that measurement would be. And what's interesting is actually we've reached that, right? That was the a high from earlier. So again, it's what's interesting about that comment, if that and if that is the time frame that you're asking about and that Carter was talking about, I don't have a problem with that. I probably wouldn't label that an inverted head and shoulders only because I think of that as a much longer term pattern. So doing it on shorter term time frames or super long term time frames less meaningful to me. Focusing on the fact that we have a higher low and breaking above resistance, very much important to me. And I think the general approach of taking the height of a pattern and projecting that as an upside measurement, I don't have a problem with that as well. I would think in my comment on Tesla, to follow on what we talked about earlier, is think about those multiple timeframes. That's honestly why I use the ACP platform. The times when I really use this often is just thinking about these different timeframes. My go-to chart is a daily chart in the lower left, a shorter term candle chart, just looking at the shorter movements and some of the candle patterns, and then a weekly chart going back for the last 5 or 6 years, and thinking about the relationship of the short-term test of a key moving average versus the long-term bottoming pattern we might be seeing here, I think is really important as an analyst and as an investor to relate those different patterns. My comment on Tesla, to be honest with you, is just seeing if we're able to make a higher low and have that hold. On the weekly chart, you can see we're sort of in this downtrend channel. It's what that sort of looks like on the chart of Tesla. I'd be looking for a breakout of that channel as an encouraging follow through to what you saw there. Next question, the McClellan oscillator made a lower high this second half of November. What's your thought on that? Is it enough to foresee a pullback? Great question. Let's take a look here. For that, I'm going to go to the live chart list, and then I have this chart, the McClellan oscillator with colors. I put this together a while ago. I've really fallen in love with this chart. As a technical analyst, you start falling in love with ways of visualizing data. When you click on something that really, or when you hit on an idea that shows the relationship, and I think that's what this is doing. And these green and red shaded areas simply are highlighting when the McClellan oscillator is above or below zero. And I found it to be really, really helpful. What you're pointing out here, which I appreciate, and I have not pointed this out yet, so points for you. I thank you for that. We are you. I appreciate the question and the point out. So this is what you're talking about. What's funny is this is what I've highlighted. All of these other examples is what happens with the McClellan oscillator is a couple different things, right? You tend to have the McClellan oscillator above or below zero. For me, is the main thing I'm looking for, and that's the main indication. So for me, as long as this remains above zero, things are pretty good. We break below the zero line, I'll color code it red, and that usually means the end of a bullish swing. What's funny about it is if you look, it actually tends to happen pretty early, right? So we're shaded green in an uptrend, the McClellan oscillator goes below zero. It's not like we've already sold off a bunch, and that's a lot of technical indicators are lagging indicators. So it doesn't tell you what's happened until way after the fact, and that's by design. The McClellan oscillator tends to be a little more early in the cycle, and it's because of how it's calculated. It's based on the difference, based on basically the change in the advanced decline data is the way I would summarize the math behind it. And so it tends to be a little more receptive or a little more sensitive to market shifts. Now, all of these red lines that you see back here are highlighting the same pattern we might be seeing here right now, which is this bearish divergence with price going higher in the green areas and the McClellan oscillator sloping downwards. With any divergence, I would say that could be a sign of a market top. However, until we get below the zero level, I don't think it's telling us enough yet. And if you look some of these times where you have that divergence, then it takes a little while before we get down to that zero level. That's the real signal for me. So this might be just following the normal McClellan oscillator playbook beautifully. I'll wait. I'm happy being patient for a break below that zero level. Thanks for pointing that out. I actually had not noticed that until you just said that. So I appreciate the question and the comment. Next question. Hi, Dave. Do you see the market continuing up until Christmas? So yeah, I mean, this is a tough one. And I will tell you, as a technical analyst, I do a lot of media outreach where I'm quoted in the media and interviewed. And I often get questions like this. I will tell you, a part of my soul dies a little bit because I don't see technical analysis, even though we want to know what's going to happen months down the road. And we even asked that in our poll question. I still think that's more of a water-cooled discussion. I wouldn't bet on anything because I have this target for the S&P at the end of the year, so that means I need to buy and sell there. I think it's more about being aware of the market movements. For me, it's all about situational awareness. It's recognizing when the trend shifts. So it doesn't matter what I think is going to happen in December. If the market turns lower, I'm going to turn bearish because of that. and not because of a predetermined target. Having said that, given how well the seasonal playbook has played out so far year to date, which has been magnificent, starting in the third quarter of last year through the fourth quarter of 2023, the seasonal playbook has been spot on. And you can go back to my interview with Jeff Hirsch from the Stock Traders Almanac. I think it was in September of 2022. Look at what he said and the chart that he shared and how closely we've followed him. It's frightening how well that's played out, but it actually is very understandable because there are seasonal tendencies that continue to work. November tends to be a very strong month that is happening. December actually tends to be a pretty strong month as well. Combining, so I would say overall, I think the fourth quarter being strong makes a ton of sense. What concerns me in the short term is the fact that a lot of things are overbought, including the S&P itself. That's what tells me it's not going to be a straight line. So I could see the market finishing strong. I would be blown away if we don't have some meaningful drawdown between now and the end of the year that probably gives us a higher low. And probably going into next year, I would expect people with some pretty optimistic outlooks given the strength that we've seen in the fourth quarter. I'm skeptical of strength in 2024 given the recession, the possibility of a recession, and the Goldilocks playbook not operating as well as we would think. So overall, I would see short-term pullback with strength overall into year-end. I think that makes a ton of sense based on the seasonal trends and what I'm seeing in the market right now. That's the best I can do answering your question. Next question. Last week, the crude oil ETF or crude oil spot price was discussed. It seems like it has completed that pattern with approximate move downwards. Now what? Current trend is a reversal or sideways or bullish. Let's take a look here. So I have a couple crude oil things in my intermarket analysis chart list. And let's see, we can start with crude oil. So $ WTIC is how you access crude oil prices. $ Brent, BRENT, is how you access Brent crude futures, and that's sort of the European benchmark. WTI Cushing is the US benchmark. And by the way, a lot of our futures and commodities data is end-of-day data that we get. We are in the process of upgrading our databases. We have real-time currencies now, which we did not before. We're adding real-time futures and commodities, and hopefully we'll continue to add more and more cool data after that, but a lot that we've been adding and that we will continue to add. You know, we talked about this head and shoulders topping pattern, I think is what you're referring to, and we broke below that neckline. So if you think of this as a head and shoulders top, you think of this as the neckline here, you take the height of that pattern, you subtract it from the breakdown, and I would agree we've kind of achieved that downside objective, 100% agreed. It's interesting, you're actually seeing a bit of a bounce in crude oil prices going into last weekend. Here's today with the USO gapping higher a little bit, up about 2%. You know, crude oil prices, it's interesting actually, number one, how closely crude oil and Tesla, that's a head scratcher, but they look actually kind of similar with this consolidation pattern. They both broke down, now showing some short-term weakness. I think for crude oil, it's all about getting back and holding the 200-day moving average. So, you know, when we reach a downside objective, which I think I would agree we have, it's all about, do we find a footing? And the way that you find a floor in the market is, number one, you stop going down. Number two, you start going up. And the way that you validate that is with a higher low, right? What's marked the pattern in WTIC and also with the USO has been lower highs and lower lows. And even with the gap higher today, we're still below, you know, last week's high. So making a higher swing high, making a higher low, maybe above the 200-day moving average, that would encourage me that crude oil prices are turning higher. So sort of the early warning, right? Have we made, have we achieved the downside objective? Thumbs up. Have we seen enough evidence, in my opinion, to confirm a rotation higher? No. And as a result, energy stocks are still underperforming. If you look at the XLE today, and if you think about what the XLE looks like, languishing at the lower end of the range over the last 3 months versus charts like Nvidia and some of the growth stocks we talked about, making new highs or very close to making new highs. Energy certainly has certainly been underperforming here in the month of November. So I'd look to see if crude oil prices can rotate higher. I haven't seen enough yet to suggest that that's happening. You're also not really getting a bullish divergence on any of these charts, right? Crude oil, energy sector, making lower lows October into November. The momentum is not making higher lows in a very meaningful way, I would say, just yet. So we'll see if that is able to stabilize. Not enough yet for me. Next question, is there a feature that shows a stock where it is trading in price in relation to or versus its estimated company valuation? Really good question, Willie. The answer is yes and no. Do we show some of the valuation measures? Yes, and I would say the best way to access fundamental data on the StockCharts platform is using a function called the symbol summary. By the way, this is a really good place to bring up, the really good function to bring up around earnings, because this is where we show after hours trading. This is where we'll show you whether a company's reporting earnings and give you a quick snapshot of what's happened here. So we can see Zoom, which just reported after the close today, up about 1.3%. It's currently up kind of in this 66, 86 region. Now Zoom was up a good amount already today. It was up about 3% during the trading day, closing right at $66. So a little bit further today. We'll see as the rest of the after-hour session plays out, as the calls wrap up, and then tomorrow, see if we're able to follow through. Zoom's still below the 200-day moving average, which I think is important. But recognizing that sort of change in one versus the other, change before earnings and after earnings, this is a good place to see it. This is also where we show some of the basic fundamental data that we represent: valuation ratios, price to book value, and cash flow, and earnings and revenues, and all that sort of thing. At this point, very limited in terms of what you can chart. The next big phase for our fundamental data pace going into next year is being able to chart things like PE ratios and others over time. We don't have that capability yet. It is very high on our developers list. If that's something that is of interest to you, you can do you a favor and me a favor too, because I'd love to see it as well. Hit our support desk and let them know that's a feature you're looking for. I will tell you, our development team, we do look at the requests and the number of requests that we get and the frequency of requests as a way to try to prioritize, because we have a lot of things we want to do with stock charts. I'd love to see us incorporate the ability to chart fundamental data over time, and that would be a great way to do it. So you can see it there. You can't see it on the quote line above charts. We show some fundamental valuations, but charting over time I would love to add as well. So again, do me a favor and request that. That would be helpful. One final question. If you are a market bottom or top picker, what would you suggest using as a trailing stop? Marty asked. And one other comment after that, about the Seahawks losses. Yeah, so I'm a Browns fan first, so I was thrilled at that win over the Steelers. I am a Seahawks fan, close second, and that was a heartbreaking loss, man. Those sort of losses, missing a field goal, that's brutal, isn't it? So I would agree. I would love to see them not be losing at the moment. Having said that, looking at trailing stops. So if you are long, and let's say you're long a name like an Apple or something like that coming off of the lows, I get this question a lot about how to manage risk. And I would say, your ability to manage the money management side of technical analysis, I would say, is far superior in terms of the value technical analysis can add to your decision making. In terms of risk management and money management, it can do so much, because just getting out of the way, minimizing your losses when the market moves against you is so vital. As much as we want to think about buying something that goes up 10 times, that's great, but minimizing losses and keeping a loss to 8 to 10% instead of 80% is a huge win in your portfolio, and that's where you're really going to add value over time. So how do you manage risk? I would say there are a couple things to think about. Number one, the very simple version would be a percent stop, and I'll give you three examples, right? It's three versions. The simple version, a percent stop. I'm going to buy here, and if we get 5%, 7%, 10% below my entry point, I'm going to sell. No questions asked. I'm done. Question number two, a higher low, right? Every time we make a higher low, you bump up your stop. You use a technical support, would be the second approach. So look back at significant levels. For example, the break above 180, pretty meaningful. Maybe that's your initial stop. And as long as we hold that, we're going to keep a position, but we break below and make a new low, then we would exit it. That would be the second point. The third point, and I would think these are progressively meaningful. The third way is to use something like average true range, which is a far superior, because it's a more dynamic way of measuring stops. Percent stops are kind of a real basic way to do it. I would encourage you to look at something like the chandelier exits. I feel like I often mention this, but it's a really good approach. Dr. Alexander Elder promoted this in his book, really popularized the use of this particular indicator. It's based on average true range, which is good because it's dynamic based on the volatility of the stock. We have great articles on our stock charts chart school section about the chandelier exit. Just click on the magnifying glass and type chandelier if you want more information about it, or pick up Dr. Alexander Elder's books on our stock chart store. I know we sell them as well. Thanks for the comments on the Browns. You do not have to tell me the heartbreak that you have as a Browns fan. I've lived it. I agree with you. It's been a tough life, but hey, every day, every time we win, that's a good win to celebrate. That's it for our live Q&A. Thanks for some football commentary, making me smile, but also thanks for the great, thoughtful questions about the markets. Any of the questions we didn't get to, we'll certainly pop it into our mailbag and hope to answer it in a future episode. But we got to wrap today's show with a 3 in 3, 3 charts in 3 minutes that tell the story of this market environment. Here's chart number 1. I was writing to my premium members at Market Misbehavior over the weekend, giving a sort of a big picture update on the rotation that we've seen off of the October low. On Friday's close, my medium-term market trend model just turned bullish. That means the short-term, medium-term, and long-term trends are all bullish. What that means for me is 2 things. Number 1, I should be bullish, right? Being bearish in the face of my model being bullish across the board, I've not found to be a very good idea. Even though, despite what I've thought at times, it's not worked out well, right? When the model is bullish, it tells you the trend is positive, and the most bullish thing the market can do is go up, and that's what we're seeing again in recent weeks here. This also sort of gives me permission to buy when the medium-term model is bullish. Basically tells me I should be confident going risk on. I can focus a little less on capital preservation, focus more on capital growth. And that's where my head is at going through November and December. By the way, I posted a video on my own YouTube channel called Market Misbehavior on Friday or Thursday, I forget which day, focusing on this model and the signal turning bullish. So if you want more info on that, check out that video from the end of last week. Chart number 2 is Disney. I think Disney is an example of a ton of stocks with a couple things going on. Number 1, bullish development in November, right? On the end of October, we have Disney testing support around 80, bouncing off of this level like a little bouncing ball with lyrics on an old TV show. You've now seen it broke above resistance, gapped above resistance here a couple weeks ago. Now it's followed through above the 200-day moving average, broken above the August high. So all of that is pretty constructive. Here's a problem, though. Now we've become overbought. And if you look to the left on the chart, the last 2 times we were overbought was at the end of January, going into the February peak, and mid-August, going into the August 2022 peak. In both of those situations, becoming overbought was the beginning of sort of a red flag moment. The MACD indicator turning bearish, well above the 0 line, was sort of the confirmation that a top had happened. So on a chart like Disney, the early warning is maybe firing. If we have a similar rally into resistance and a similar rotation like we saw in August of last year and February of this year, I'd be looking to the MACD indicator. Take that trend following approach and marry it with a leading indicator. And that's what a chart I would be looking for on the stock like Disney right about now. Chart number 3, 2 halves. On the top half, we have the S&P 500 year to date up 20%. Not a bad year if we would end the year right about now in the end of November. QQQ, the NASDAQ 100, over doubling the percentage return, up almost 50% year to date. It was up 30% year to date just a couple weeks ago. Now it's really gained quite a bit, up 47% year to date. Pretty impressive, and shows the differentiation, sort of the growth versus everything else trade, which has been, I would argue, the story of 2023 continues here toward the end of November. But compare that to the GBTC, which is the Bitcoin trust from Grayscale, up 260%. So when I'm talking to people like Adrian Zadunchik, who we interviewed on the show on Friday, if you missed that great episode focusing on some seasonal tendencies and his outlook for Bitcoin, I would encourage you to check out that episode. But we talked about it, and it's just the order of magnitude on the returns on cryptocurrencies when they get under their feet under them and continue higher. It's incredible. It's a whole different level of percentage gain. So recognize that there are other markets outside of equities having some pretty significant gains. Bitcoin in 2023, maybe even a bigger story than the NASDAQ 100. Folks, that's a wrap for this show. Thank you so much for joining us every weekday after the close for the Final Bar. Thanks for participating in our live chat. We so appreciate it. Have a fantastic holiday week. Don't forget to like this video and subscribe to our YouTube channel before you leave. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be well, stay safe, have a good night.